Hello guys, glad to have you on board again today. A real quick update because we do have interesting stuff to talk about. First of all, let's have a look at our beautiful dashboard, and in here the only thing that matters is the one we've pointed right from the weekly update. We are heading toward Thursday, which is going to be the big day. So this is tomorrow, but don't forget that the market can sometimes anticipate the volatile day of the week, specifically when we are into these kinds of sessions in which the rest of the week is freakingly boring and everything is concentrated into a single day. So today might be interesting because we should see potential arbitrages ahead of tomorrow. So that's a potential, of course, but that means that volatility will be at risk between today and tomorrow, because this is where we have, and don't get me wrong, okay, a lot of professional speculators know that this is probably going to be a problem, because we're expecting anyway a new COVID package in the Eurozone, and we're also expecting Christine Lagarde to start pulling over the trigger against the Fed that has gone really offensive recently, to a point that at some point the ECB will have to do something, or at least use some vocabulary to send a message to investors, because otherwise, if the 1.22 area were to be broken, that would open the door for some significantly higher euro valuations, which is of course at some point going to be hell of a problem for the euro area. So remember that price stability is the Fed's and ECB's mandate, and at that point they're really doing shitty jobs. So we'll see all about that. It's still a question mark, of course. That doesn't mean anything will have to happen, but it's just that there are fairly high probabilities, which also means that there are lots of uncertainties about what type of mechanisms are going to be used by Christine Lagarde and the rest of the ECB. So we'll see all about that. Big question mark. There are some rumors, of course, as usual. So as you see that we see rumors from the smart money investors and stuff like that, means they're definitely expecting a bit of volatility. So we'll see all about that, because of course in the meantime, in terms of volatility, oh fuck, we obviously have nothing into the S&P 500. It's still the same old game in which whatever happens, there's always one way out, in which the European Union is flawed and the US stock market is soaring. So this is exactly what happened yesterday. Remember that I've warned you about the fact that short-term momentum was squeezed, or not the momentum, sorry, momentum as well. So we had momentum being squeezed, followed by prices being trading without enough volatility, 15-minute chart time frame. And now guess what? We're just doing the same stupid stuff, but on the higher time frame. So now we're doing this as well in here, squeezing pattern on momentum and both prices. So that definitely tells you that the volatility associated with this market is so goddamn low. Ahead of the big day of the week going tomorrow, we might see some early trading volatility rebounds. Normally, we should see that. So we'll see about that. That's the reason why I'm warning about this. Anyway, this can be anything but reversal context for experienced traders only. So I don't want to see anyone else dealing with those prices but experienced traders. Moreover, because these double squeezing patterns are the freaking difficult ones to trade. They're probably the hardest context ever possibly going to be done. Simply because trading reversals all by themselves is definitely not easy in any given fucking way. Like I said, no net bearish exposition in Wall Street is possible. Only if you have bullish stocks ahead of it, you can consider some cover trades right now. And only in these conditions, looking for reversals is a possibility. Otherwise, there is still a lot of other factors to price in before considering a reverse is probable. Okay, and I don't nearly think we're yet there. So pullbacks and returning back to some early supports, overlapping resistances, not to mention these, are high probabilities without going any further than that, okay? So as for now, we just shrink the volatility ahead of volatility day that is expected to be tomorrow. things could happen today. That's the message for today. Okay, we do have a cycle pullback in here, which is a general good opportunity to flush out of a pullback of a taking profit pattern. So today could be a very interesting reversal day for reversal traders, but we need to assess this underlying lack of speculative behavior risks, which means there's not enough amplitude for us to risk manage these trades correctly. So, I mean, experienced traders, you know how to navigate these things. We're going to have to divide the position sizing by 2, be real patient, like really fucking patient and resilient. And we need to wait for clear evidence of invalidation before going out. And this is psychologically very hard to manage. It requires a shit ton of experience. So if you're still an intermediate level guy, this is definitely not the type of reversals in which you want to jump in, because these ones are definitely freakingly subjective to navigate. Okay. That being said, that's for the US stock market. Correlated assets still trade within their native ranges. These correlation in here, even though it is mature right now, still isn't accumulating or breaking or whatever the fuck that is. So we're waiting for information. Nothing comes out of this one so far. VIX is still trading with the same price area without confirming the breakout of this area. So we're still navigating into shadow territory in which either we find some volatility because of tomorrow or we do not. And in that perspective, back to calm, and we're going to set ourselves below the 20 area, which is very likely going to be stopping looking for reversal trades into this area and letting the stock market go absolutely crazy stupid. But that's one of the possibilities. Remember that we've assessed the probabilities for this to come. By the way, look at Apple. We're looking for the third range boundary. The big question mark in here is, are we going to succeed breaking it, or is this just the other stupid bullshit in which we're going to try doing something, fail, and we're going to have an opposite direction breakout later on? So I'm still looking for it, because of course any failure for Apple into this area is going to do the job for me. And like I said, if they try and fail, I'm definitely going to push the trigger, but not now. And I'm certainly not going to follow this breakout until it gets totally validated, which I doubt it's ever going to be. But I mean, that's the thing, okay? So don't get me wrong. That doesn't mean I'm not going to exit my bearish trade on Apple. If I have to, I'll definitely do it. But certainly not by just doing a tiny little breakout, because I totally expect they will try it out before failing it, very likely. We'll see all about that. Okay. Anyway, cryptocurrencies, very interesting. Oh, sorry, gold first. Okay, so gold is kind of a rebounds right now. We're looking at validation in here as we reach out to the trend channel. So this is a big question mark. Are we going to validate this reverse? It feels very likely, of course, which means I'm still looking at potential pullbacks on third range boundaries that may come later on. I'm just looking at the appropriate time frame. So that depends on what we do, okay? If we keep pushing, which is one possibility, and if we reverse these contexts, then the third range boundary might be showing up into the 4-hour reference chart. Otherwise, we've already reversed the H1 time frame. Kind of look like we might be stopping out there. At least we do have viable taking profit signals out there. So for now, that would be the H1 time frame as a reference for me for a third range boundary entry. If we reverse this context, then of course adjust accordingly to the higher time frame. That's pretty much all about it. EURJPY is still trying to break its resistance in here. God knows if it's going to succeed or not. Of course, ECB tomorrow, so don't be dumb enough to make a bet into this context. This is definitely not something rational to do. I goddamn don't know where the euro is going to go by tomorrow. And that's the reason why you must have limited exposition. I profit took earlier this week, and that's the reason why right now I think I'm ready for the ECB. Really open-minded with whether it's going to be done or said, but I'm definitely looking closely at it. It's going to be an important meeting. Just God knows what's going to come out of it. Okay? Cryptocurrencies now, of course, really a lot of important things to talk about. I've seen people talking about the breakout of this triangle, and of course, same old mistakes. I mean, if you use my strategy, you goddamn knows that this thing absolutely don't matter, because you're dealing with the range inside a bigger range. Okay, so this was a range in here, H1 time frame range. Okay, inside, oh man, a bigger range. So it's still the same old thing. Okay, in here we're dealing with a mature range, as this is not a breakout. Okay, so this is pretty much like a double top structure. I mean, we don't hold significant enough candle close, and it only has been done with the Ethereum's launch. So this is basically wave 1, 2, 3, and we're getting to wave 4. So we do have a mature range at that point. And as the range is mature and as the trend still goes on, what I'm looking at right now is either we're going to pay for the trend channel, I need a signal and I don't have any at that point, or I'm going to look for supportive prices below 50% for a pullback typical trade. So that would be the area for natural fourth range boundary speculation. That is for trend traders, okay, intermediate to experienced level only, of course. So either we have a signal into the nearby area, which doesn't look like the plan right now, or we get into this area and I'll be willing to trade it, okay? So right now, patiently looking at the charts into the nearby area, that would be very aggressive to find the bulls out of these price areas, but why not, okay? The best case scenario and best option for us would be deep in a toe below this level, where I think a fourth range boundary can definitely be traded, okay? So monitoring signals, 4-hour chart time frame for trend followers. Experienced traders will of course look at the lower time frame as a reference in here and look for the fourth range boundary. Of course, you know about the areas we can deal with. Of course, this one is one, but also look at more specifically into this area. Okay, so 61%, 76, these are the areas we look for. But you know how to navigate these things. Okay, so that is for experienced guys only, okay, in which we're going to pay for the fourth range boundary, or at least look at it on the lower time frame. For all others, you might you will need to wait for a trend signal in the 4-hour reference chart, and you have the price okay, which means if price reactivates, you're going to get your signal, or you're going to get the triangle, sorry. Okay, but you also need a signal prior to that, which you don't have at that point, but things could change. All right, that's pretty much all about it. See you guys later. Wish you a pleasant day. I am going to record or re-record the trading lesson number 2 after recording or re-recording the trading lesson number 1 yesterday, simply because, I mean, these were recorded with the absolutely ugly video stuff I had previously on the first COVID confinement. So this was like a cheap, real cheap $30 camera, stuff like that. This is the only thing I was able to get during the pandemic, because of course it was Jesus motherfucking stocks out of stock everywhere. So I finally got myself a decent camera later on. So that's the reason why I wanted this series to be as good as possible. And of course, starting these trading lessons with ugly cameras was out of my usual standards. So I really wanted to record the 3L1 and number 2 again. That's something that will be checked right by today. Okay, later on. See you guys.